Welcome back to the show. I'm Foreman, and today we're going to be talking about the UK stocks I bought, as well as which stocks are doing well in my portfolio and how I've relatively done against the markets for this week. Yes, my voice sounds different. I was out on a sesh on the squash last night, and it's going to happen again, so that's why it's quite a fast-paced upload today. And I've got a new record for the minimal amount of scripting I've got. I've literally got about 8 words. But I do love the challenge, so let's see how it goes. If you like the video or you want to support the channel, please one of these help beat that YouTube algorithm. So starting, let's look at the top faller in the portfolio, which is actually the likes of Team 17. None of my stocks in the portfolio had actually fallen this week, but Team 17 hadn't done as well. Shares have only risen by 0.65%. However, there is some very promising news in the industry. This is because, and I believe, the likes of Sumo Group had a bid for acquisition. Sumo Group is, I would say, a competitor, although not a very close competitor, as their gaming catalogue does vary to the likes of Team 17. But what it has shown is that companies of much bigger scale are buying up others in this industry, especially in the UK. Perhaps they see that UK valuations are cheaper, so they're buying these studios and likely going to make a lot of money off of it and the exposure that they can get these studios under their bigger brands. Sumo Group was an interesting one for me. I always deemed that it was lower quality than Team 17, but it is still, regardless, a good quality stock. Obviously, their gaming catalogue does range quite drastically, and this is where I think Team 17 may not be acquired. They do have a good catalogue of a wide range of arcade games that can appeal to all audiences, so I imagine if a brand does aim to acquire Team 17, they might be looking for diversification. They may not be primarily a software video game developer. Instead, they might be in a different niche. They might be, let's say, in a niche that could link up. They might be selling, let's say, computer parts, and they may decide, actually, we want some software we can sell. We're going to package, let's say, an antivirus software with the likes of what Team 17 can offer, which would be a really odd combination. I'm really just speculating here. I've not bought any more shares of Team 17. I would like to, because I think they are a very high quality stock, but shares since that, obviously, shares in about the last month have obviously strengthened, and it's not really been a good buying range for me. Also, forgot to mention, the FTSE 100 is up 0.28% this week, the FTSE 250 is up 1.85%, and the S&P 500 is up 3.69%. I marginally underperformed the US markets this week, but outperformed the UK. My stocks are up 3.3%, primarily dragged up by one key investment, although my second highest holding had done very well too. And if you'd like to sign up to my broker, Freetrade, you can get a free share worth up to £200 when you use my link in the description down below. Even more interestingly, I believe at the moment, at least until the month ends, so yeah, they are offering a £5,000 free share package. This may be just to people like me referring people, but it's certainly worth investigating and seeing if you're able to enter this competition. The top riser in the portfolio was actually Argo Blockchain, one that had been keeping me down, and I was certainly a bag holder on this investment, with shares dropping at one point at a peak of 60% overall with my position. As I said before, my mistake is that I bought far too early. I fell victim to FOMO. I didn't really get the fear of missing out, not in that way. I didn't have emotion of fear towards it. But what happened is that I did buy in at a higher price, when in reality I probably could have waited. I could have been more patient and likely set a reasonable price target. So I suppose in that way I was rational and quick to buy, rather than perhaps the actual fear of missing out itself. Although that's easy to say in hindsight, because obviously since then shares have cooled off massively, and so I'm not trying to say, if only I'd done this right, I would be doing much better. What I'm trying to look for is the fact that my mistake is I bought too early. I should have waited. I knew the shares were being very hyped up. I should have cooled off and said, look, you know what? If shares are going to rise, that's fine. But I will wait for a reasonable time to enter a position and then buy in. Because otherwise you get caught victim to what I've had, where I'm now a bag holder, although I still hold Argo Blockchain because they do have a lot of share price drivers in that short to medium term, two of which we have actually heard about this week. They mentioned that this week they were on about the offering to dual list, the whole idea that they will sell UK shares so that US investors can buy them on the other markets, and this would be a great way to provide the equity and pretty much, and I'm really out of my depth here, push the shares up. At the moment, I believe Argo Blockchain has something like 392 million shares in the pool. So the US buying up some of that and pushing it over to the other side makes for a good balance. And with the US investors and their market hype, I certainly think there's a lot of potential for Argo blockchain to push up in the short to medium term. However, at the moment, this is all hype once more, and these RNSs are coming at really, in my opinion, sneaky times. I mean, look at it. At the moment, we've got the likes of this RNS just released, and then literally a few days later, they're on about the construction of their Texas facility, Helios. It seems like they're really trying to plug RNSs at the perfect time to really hype up shares. And I find that, as I've said before, is a bit suspicious. The management did leave a bad taste in my mouth last time this happened, where they were like, okay, we're only just looking into the idea of listing or dual listing in the US. And that was not very good. And I felt, you know what, a lot of us investors have been betrayed to and lied, because even though the speculation was ongoing, they didn't try and halt it. Understandably so, though, because if I was in that management perspective, I would like shares to hype up, especially if you were looking for that cheeky shareholder dilution, which they did end up doing. Regardless, I stand steadfast on my opinion. I refuse to buy more shares. Yes, maybe I missed out on some of the gains, but ultimately, I'm already bag holding. I believe my average share price is okay, and that eventually over the next 1 to 3 years, it should exceed that, where I can trim a majority of the position and have a small exposure to Bitcoin. The stock I actually bought this week was the likes of Boohoo, which may be of no surprise to you. Shares have actually strengthened somewhat since the week began, but they were trading quite low and close to my average indeed. My average is around about £2.53 per share. Shares were trading at around about £2 in the high 60s and low 70s. So I figured at that point, you know what, I'm going to keep buying more. I used my weekly deposit plus a bit of that cash position to buy more into this position, because I am very bullish over Boohoo. It is obviously my biggest position, but this is also one that has a lot less speculation compared to my other holding like Argo blockchain. At the moment, I do think the valuations are being stretched. We're in an inflationary fearing environment, as I mentioned in my Boohoo update, card at the top right of the video. And I feel that at the moment, valuations are certainly going to be pulled down. People are looking for more short-term investments. Boohoo is a growth stock. They're more of a long-term investment, even though they have considerable cash flow each year and high amounts of earnings. And so realistically, they're probably being dragged down in price for reasons they shouldn't be. But then you've also got that lawsuit and that behind-the-scene risk that threatens their ESG once more, although I don't believe ESG funds really bought back into it. Whatever it is, I think it's the eye of the storm, and this may not be the correct way of actually discussing this. The idea is that I believe right now, here's a chance where a lot of different factors are pushing shares of Boohoo down, and I think it itself is a good opportune moment to top up or develop a position, because at the moment there are so many external factors really pushing this down. You've got that US lawsuit which claims it could take up to £100 million in fines. You've also still going back to the modern day slavery acquisitions and the fact that Boohoo still needs to earn the transparency, and they need to show transparency to earn the trust of ESG investors. And lately they did show, or at least previously they did show, that their governance was certainly on the weaker side, although that is to be expected as they are a family run business, hence their AIM listing. The AIM listing isn't there because they're trying to hide stuff off the books, whereas a lot of people, or companies, would like to jump into the FTSE 250 or FTSE 100. The reason Boohoo is staying on the AIM market is, for one, there's not much that these FTSE 350 really adds in terms of value to the company. It just means more filings, more reports, ultimately more expenditure. However, the biggest advantage of the AIM, and this is, in my opinion, a great advantage, is the fact that there's no inheritance tax on the shares. And I may be wrong here, but I'm pretty sure I remember hearing this, but I've not researched it now. The fact that there is no inheritance tax means that they can keep ownership of the business across the years. And for me, that's actually quite a bullish long-term sign. The founders are going to remain in the family, and it's likely going to be run with that in mind. After all, you've got these companies that do very risky things, mainly because the insiders don't have a large proportion of the business, which is what I like, as Team 17 has a high insider ratio. Argo blockchain does not, and that's one of the things that did concern me. But with Boohoo, as I said, over the medium to longer term, I think they're going to benefit very well. There's a lot of hype over Primark and how the high street stores are back, retail shopping, great. Ultimately, with the amount of sales that Boohoo are doing and the amount of money they must be making, they're really onto it, and I think they're going to do well over the longer term. Another one that rose quite well was the likes of Games Workshop. And I believe, and I can't exactly remember what, but on the 28th of this month, so in about a few days, I believe there is an announcement, and this may be results, and it probably is. I think there's a bit of hype before results. People are quite bullish on what may happen, and so that's why we're seeing shares rally like they are. And at the moment, they're trading more at the higher end of their trading range, and so it's not really one for me. As I said, I will buy back in when it reaches the 100, maybe £105 per share, but at the moment it's a bit too high for my valuation, and that I don't really want to push up my average price too much just for shares to fall again. After all, my cash position is limited, and I don't want to just exhaust it for no reason, although Boohoo has certainly done that with a good reason, in my opinion. Obviously, this episode was short. I'm clearly hanging. I've got a drink behind me that's obviously of no brand, of no matter, and I'm probably going to go out on sesh again tonight. So I say sesh unironically, but I mean to say ironically. Thank you for watching. If you'd like to see my free UK stocks to buy in June 2021, that's probably not even the right month, July 2021, then click the card at the top right of the video. Thank you for watching. Have a fantastic day.